15-hour California Real Estate Tax Law Course, Qualifying Education, Practice Test. Question 1. Under Proposition 13, what is the maximum annual inflation adjustment for a property's assessed value? A. 1%, B. 2%, C. 5%, or D. 10%? The correct answer is B. 2%. Prop 13 limits the increase in assessed value to a maximum of 2% per year unless there is a change in ownership. Question 2. In California, when is the first installment of property taxes due? A. November 1st, B. December 10th, C. February 1st, or D. April 10th? The correct answer is A. November 1st. The first installment is due November 1st and becomes delinquent after December 10th. Question 3. What is the default withholding rate for CalFIRPTA on the sale of California real estate? A. 1%, B. 3.33%, C. 10%, or D. 15%? The correct answer is B. 3.33%. California requires a 3.33% withholding of the gross sales price for state taxes when a seller is a non-resident. Question 4. To qualify for the $250,000 capital gains exclusion on a primary residence, the owner must have lived in the home for at least A. 1 year, B. 2 years out of the last 5, C. 3 years, or D. 5 years. The correct answer is B. 2 years out of the last 5. The IRS requires the home to be the primary residence for at least 2 of the 5 years preceding the sale. Question 5. What is Mello-Roos? A. A state income tax credit. B. A special tax assessment for community infrastructure. C. A type of mortgage insurance. Or D. A federal agricultural subsidy. The correct answer is B. A special tax assessment for community infrastructure. Mello-Roos is a special assessment district in California used to fund local improvements like schools and roads. Question 6. What is the recovery period for depreciating residential income property under federal law? A. 15 years, B. 27.5 years, C. 30 years, or D. 39 years? The correct answer is B. 27.5 years. Residential rental property is depreciated over 27.5 years using the straight-line method. Question 7. In a 1031 exchange, how many days does a taxpayer have to identify a replacement property? A. 30 days, B. 45 days, C. 90 days, or D. 180 days? The correct answer is B. 45 days. The taxpayer has 45 days from the close of the relinquished property to identify potential replacement properties. Question 8. What is BOOT in the context of a 1031 exchange? A. The profit from the sale. B. Non-like-kind property or cash received to even out the trade. C. The legal fee for the exchange. Or D. The down payment on the new property. The correct answer is B. Non-like-kind property or cash received to even out the trade. BOOT is any value received in the exchange that is not like-kind, and it is generally taxable. Question 9. How long does a taxpayer have to complete a 1031 exchange from the date of the first sale? A. 45 days, B. 90 days, C. 180 days, or D. 1 year? The correct answer is C. 180 days. The entire exchange must be completed within 180 days or by the tax return due date, whichever is earlier. Question 10. What is the federal FIRPTA withholding rate for most residential sales by a foreign person? A. 10%, B. 15%, C. 20%, or D. 25%? The correct answer is B. 15%. The standard FIRPTA, Foreign Investment in Real Property Tax Act, withholding rate is 15%. Question 11. Which proposition allows California homeowners over 55 to transfer their tax base to a new home? A. Prop 13, B. Prop 19, C. Prop 65, or D. Prop 218? The correct answer is B, Prop 19. Prop 19, which replaced Prop 60/90, allows eligible homeowners to transfer their base year value anywhere in California. Question 12. What type of tax is the documentary transfer tax? A. An annual property tax. B. A tax paid upon the transfer of real property. C. A tax on rental income. Or D. A tax on mortgage interest. The correct answer is B. A tax paid upon the transfer of real property. This tax is paid to the county, and sometimes city, when a property is sold, based on the sales price. Question 13. Ad valorem taxes are based on A. The owner's income. B. The value of the property. C. The square footage of the lot. Or D. The age of the owner. The correct answer is B. The value of the property. Ad valorem means according to value. Question 14. What is the adjusted basis of a property? A. The current market value. B. The original cost plus improvements minus depreciation. C. The loan amount remaining. Or D. The assessed value for Prop 13. The correct answer is B. The original cost plus improvements minus depreciation. Adjusted basis is the value used to calculate capital gains upon sale. Question 15. What is the maximum capital gains tax exclusion for a married couple filing jointly on their primary residence? A. $100,000. B. $250,000. C. $500,000. Or D. $1 million. The correct answer is C. $500,000. Married couples can exclude up to $500,000 of gain. Single filers can exclude $250,000. Question 16. Which of the following is not deductible for a homeowner on their primary residence? A. Mortgage interest. B. Property taxes, up to SALT limit. C. Maintenance and repairs. Or D. Loan origination points. The correct answer is C. Maintenance and repairs. Maintenance and repairs on a personal residence are not tax deductible, they are considered personal expenses. Question 17. What is straight-line depreciation? A. Depreciating equal amounts each year over the useful life. B. Depreciating more in the early years. C. Depreciating only the land value. Or D. A tax credit for green buildings. The correct answer is A. Depreciating equal amounts each year over the useful life. Straight-line depreciation spreads the cost of the asset evenly over its recovery period. Question 18. Which of these is considered like-kind property for a 1031 exchange? A. An apartment building for a personal home. B. An office building for raw land. C. A primary residence for a rental house. Or D. A boat for an airplane. The correct answer is B. An office building for raw land. For 1031 purposes, almost any real property held for investment is like-kind to other investment real property. Question 19. When is the second installment of California property taxes due? A. December 10th. B. February 1st. C. April 10th. Or D. July 1st. The correct answer is B. February 1st. The second installment is due February 1st and becomes delinquent after April 10th. Question 20. A change in ownership in California usually triggers A. A tax refund. B. A reassessment to current market value. C. A decrease in property taxes. Or D. An exemption from Prop 13. The correct answer is B. A reassessment to current market value. When a property is sold, it is reassessed to its full cash value, the purchase price, under Prop 13.